hey, if you're starting or expanding an HVAC business and you maybe have gone to the bank for a loan to help with the startup costs or the expansion costs, and the bank has asked you for a set of financial projections, then you have come to the right place, because we have created a financial projection template built specifically for heating and cooling HVAC businesses. And I'm going to walk you through this template, show you how to fill it out, how you can create a set of 5-year financial projections for your business. I am also going to give you a discount if you make it to the end of the video. I'm going to give you a discount code that you can access, that you'll be able to purchase this template at a discount. We've also put a link to this template in the description of the video below. So with that, let's go ahead and dive into the model. Okay, so we are starting with the end in mind, and we have our at a glance tab pulled up here, which will show you what you'll get at the end of the process of creating your projections. You're going to get some nice charts and graphs and tables that you'll be able to pull into a business plan or a pitch deck, or just be able to present to your banker or potential investor. And you're also going to get a 5-year income statement summary, a 5-year cash flow summary, 5-year balance sheet summary, and then your income statement, cash flow, and balance sheet all broken down by month for each of the 5 years. So that's kind of the end of the process, but we have a little bit of work to get there. And so I'm going to show you how to fill this out in order to create a set of projections for a heating and cooling company. All right, so I'm on the Input Assumptions tab. And what you'll be able to do here is put in your start month. You can put in a personal investment. Now, if you're trying to get an SBA loan or a bank loan, typically they're going to want some skin in the game, some down payment from you or from the owners coming into the business. And so we put a $50,000 personal investment into the template here as an example. Now, we'll also have accounts receivable terms and inventory, beginning inventory. So this accounts receivable, this is just saying that, hey, 80% of our customers are going to pay us when we provide the service. 20% will pay us on 30-day terms. So if you have commercial customers, let's say your commercial customers might pay you in 30 days. So let's say 80% of your business is residential, 20% commercial, then an 80-20 split here probably makes a lot of sense. On the inventory side, if you have some initial inventory that you're going to start with as you start up, you can put that in here. All right, you might also have some tools, so maybe a truck or two, and maybe a building to store some inventory, store your trucks, store your tools, that sort of thing. And so that's what we've got input here: $50,000 for tools, $100,000 for trucks, and $100,000 for a storage building. And we put that all in month 0, which means the beginning of the model. So if you were to say, hey, we're going to start without a building, but we want to buy a small building in 6 months, you could put month 6 here to indicate that that purchase is going to be made in the future there. All right, so we have $250,000 worth of fixed asset startup costs here, plus $15,000 of inventory. So we're going to need a loan because we've only put in $50,000 here. So we're looking to borrow $250,000 here from an SBA loan on 10-year term at 8%. If you have other loans, you can add those in here as well. Now let's jump to our input revenue tab. So here is where we can project or forecast our revenue for both the residential business as well as the commercial business. And so the way we've got this set up is that you can add in an advertising spend. So we're saying, hey, we're going to spend $2,000 a month. We think it's going to cost us $20 to get one lead for a residential HVAC business. So we'll have 100 leads from paid advertising. We'll also have organic leads, just word of mouth, or people that are searching for us online and find us organically. So we'll have 120 leads a month. We think we're going to convert 10% of those leads into customers. So that gives us 12 new residential customers in month 1. Then we can break down here the different services, the installation and repair services that you provide. So we have a furnace install for residential, furnace and AC, just an AC, furnace repair, AC repair, ductwork services. You get the idea. So you can input whatever services you provide. In this column, you're going to want to put in what percentage of these 12 new customers, what percentage of those customers are going to purchase a furnace install, what percent a furnace and AC install, and break that down for us. So what you expect your kind of the breakdown of your services to be. You can enter in an average price point for each of those services, and then a cost of materials and cost of labor. And so you probably are shooting for some gross profit on all your jobs. Maybe you're shooting for, you want a 40% gross profit on all your jobs, but maybe you think you're going to average, or you want to be conservative, and so maybe you're going to average 30% gross profit. So on this furnace install, for example, what we've done here is we're saying that we've got a little calculation up here, and it just says the average price point times 0.35, so 35% cost of materials, And then we did the same thing for cost of labor. So you add those two together, that is a 70% cost of goods sold, giving you a 30% gross profit margin on the job. And so whatever you think you expect based on your experience and the way you plan to price and that sort of thing, whatever you expect your cost of goods sold to be, you want to enter in those costs here. Now you have the ability to increase the price, price of those services annually. So you can just put in, let's say we're going to increase our prices 5% annually, and we think our cost of goods sold is going to increase by 4% annually. So hopefully we'll increase our margin a little bit each year is the idea. Now that was the residential installation and repair services, but we may also have a program where we do residential preventative maintenance, and we try to convert some percentage of our new customers to sign up for our ongoing kind of maintenance and monitoring service. And so we've got we're saying 20% of our new customers are signing up for the ongoing maintenance program. So we've got 2 new customers a month. And we think, hey, 3% of our customers that are signed up for this program are going to cancel each month. So there's going to be some percentage that will cancel. And then this will forecast how many active ongoing customers you have signed up for this maintenance and monitoring program. And let's say it's $49 a month for residential. And so what this will do is multiply the number of active customers you have for that times the price point to give you your monthly revenue there. And so we're just going to assume on the cost of goods sold here, a 33% cost of goods sold as a percentage of that maintenance and monitoring revenue. You are probably going to have to send a tech out once a year to do that preventative maintenance. And so that would be your cost, and maybe you're shooting for that 33% range. So this will calculate that residential maintenance cost of goods sold. And now we basically go through and do the exact same process for the commercial side of the business. The main difference we have here is that, hey, we think the cost per lead for a commercial customer is going to be much higher. So we're going to have less leads, but the leads that we do have, hopefully we're going to convert a higher percentage. So we've got a 20% conversion rate here. And then all the commercial services, are just going to be higher price points, right? Maybe lower margins for commercial work, possibly because they're bigger jobs, maybe more competitive. So perhaps lower margins, but larger dollar amounts that we're working with. Same thing, you can increase the growth rate in prices for commercial services and cost of goods sold. And then you could have the same thing, commercial maintenance services that you provide as well. Again, probably just higher price points, maybe different conversion rates that you might expect for that. Now, as we move down, we can see sales commission. So you might have the ability to provide sales commissions to your sales team, and maybe it's going to be a different percentage commission for residential services compared to commercial services. So you have the ability to enter in those different sales commission percentages. Residential, maybe there's a little bit more margin. You can afford to do that 7%. Maybe on the commercial work, it's more competitive, it's tighter margins, and so you've got maybe 5% commission on that. And then this will project your total revenue and your total cost of goods sold. Now we can move over to our input other expense tab. Now these first 3 rows, these are blacked out here because they're actually calculated already on the revenue tab. So the advertising for residential, commercial, and the sales commission, we've already gone through, we've already added those assumptions in, but we've just got a slot here for them for the financial statements. Now we've got some other operating expenses here. We have credit card fees, and credit card fees are typically going to be based on a percentage of revenue because every time you collect payment via credit card company is going to charge a percentage of what you collect. And so what we've said here is that, hey, 0.02 or 2%, that's how you'd enter in 2% of our total revenue is going to go towards credit card fees. Could have insurance, accounting, rent. I also have equipment rental, so there may be specialized equipment that you're just renting, or vehicles that you're renting. And so that is set at a 0.05 or 5% of total revenue. You can also select to make that as a percentage of any of these expenses. You can say, well, this is just going to be a percentage of the residential installation and service revenue, or a percentage of the residential maintenance revenue. So you can kind of break that down however you'd like. All right, so now on the input salaries and owner draw tab, we have the ability to add a receptionist with starting month right away. Month 1, you're going to have a receptionist in the office taking calls from customers, and maybe a manager. But then as you grow, you are going to have maybe site supervisors here. And so you can see that you start them in month 13. Maybe we start another one in month 25, another one in month 37. So each year we add another site supervisor. Now, one thing to keep in mind is that your technicians, their cost, their wages is already taken into consideration here with the cost of labor. So you don't need to double enter, if you have a technician, they're already getting paid through that cost of labor calculation. these salary positions are kind of the overhead for the company, not tied to specific jobs. So be aware of that so that you're not double counting. And with that, we are done. We're back to our at a glance tab here. And so what you'll want to do is just make sure that once you've entered in all your assumptions, take a look at your net income and your gross profit percentages and just make sure that those seem to align with industry expectations. So if you get done and you have a net income percentage of 50%, you're probably off. Something's probably wrong. Net income percentages for an HVAC business are probably going to be in the single digit range. So you're probably not looking at 40-50% net income profit margins here. So keep that in mind as you go. All right, so that's it. Thank you for making it to the end of the video. As I promised, we will give you a discount code. So there's going to be a link down in the description of the video below to a form where you can put your email address in, and then it will email you our most up-to-date coupon code so you can use that at checkout. And when you check out, and there'll be a link to this template to actually purchase the template as well. So there'll be 2 different links in the bottom of the video description. Grab that coupon code, go ahead and purchase the template, use that discount code on us. And hey, while you're down there, if you thought the video was helpful, give us a like and subscribe to our channel so we can help more business owners get started and grow their business. Thanks.